Build to suit versus spec construction. What's the difference? Well, in commercial real estate development, two common strategies dominate new builds: build to suit (BTS) and speculative or spec construction. While both involve creating new properties, the timing, risk, financing, and tenant dynamics differ significantly. And understanding these differences can help investors, business owners, and developers choose the right path for their goals. So, what is build to suit? Build to suit project is custom designed and constructed for a specific tenant before construction begins. Then the tenant and the developer agree on the design, the layout, the lease terms before anybody starts any work and invests money in the project. And a key feature of a build to suit is there's big tenant commitment secured before the construction starts, typically a longer term lease as well. Basically, you get a custom design tailored to the tenant's operational needs, generally looking for a long term lease, often 10 to 20 years, providing income stability. And there's a definite financing advantage. It's easier to secure financing due to guaranteed lease income. Pros for investors: we have reduced vacancy risk, predictable cash flow. And cons: there's limited flexibility for future tenants if the current one leaves. So, what is speculative construction? Spec construction refers to building a property without a committed tenant in place. So you're building a vacant building and you're going to have to turn around and sell it. The developer constructs the property to appeal to a broad market and then leases or sells it after completion is the general play. So key features of spec construction: there's not a pre-lease. Tenant is found after the project is complete or underway. It's generally a market-ready design built for a broad general appeal, often with flexible layouts. There's a little higher risk, but there's also higher reward, potential for longer vacancies, but higher rent premiums also in strong markets. So the financing challenges: you require strong market analysis to secure funding without a tenant. Pros for investors: it gives you flexibility to adapt to changing tenant needs, potential for higher rents in competitive markets. And carrying costs: if leasing takes longer, you're gonna have to foot the bill for a little bit longer. So really, at the end of the day, you've got two choices. And which strategy would you choose? Choose build to suit if you have a committed tenant and want predictable returns and prefer a little lower risk. Or choose spec construction if you believe the market is strong and want flexibility and you can handle a longer lease up period. And really, for the developers, the decision often depends on market conditions, access to financing, and the investment timelines. For business owners, BTS ensures the space is perfectly suited to your operations, while space might offer quicker occupancy available. So really, the bottom line here is that both strategies can be profitable. The right choice depends on your risk tolerance, capital structure, and the market demand. So if you're exploring a BTS or spec construction project in the Katy, Fulshear, or West Houston area, working with an experienced commercial real estate broker like me can help you evaluate site selection, financing, and leasing strategies to maximize your return. Thanks for your time and have a good day.